Video, I will practice this 15-minute scalping strategy that actually generate at least 60% profit per week in a life trading account. I will backtest it 200 times with an initial account size of $1,000 and with a 1 to 2 risk-reward ratio. For my backtesting, I always use Trading Rush because it's really easy, free and convenient to use. All you need to do is to set up your account size and the profit and loss per trade and then trade. The app will give you all the information you need about the strategy such as win ratio, profit and loss, profit factor and more. You can also run simulated profit ratio using different risk to reward ratio to develop more successful trading plans. Okay, I'm going to do my practice on Bitcoin United States dollars. And it works perfectly well on a 15-minute time frame. This strategy consists of 3 significant trading view indicators. For the first indicator, let's search for Bill Williams' awesome oscillator. This one here by Hpotter, as you can see that there are a lot of them in search result. For the second indicator, let's add the famous lazy bear squeeze momentum indicator, as it has been the most popular trading view indicator since 2011. Now, for our last indicator, we will be adding the ATR-based indicator. Okay, now we need to make some slight adjustments to these indicators. So first of all, let's adjust the Bill Williams indicator. Pull up the setting panel by double-clicking on the indicator. Now change the length slow to 25 and length fast to 9. Go ahead and click the OK button when you are done. Head over to the squeeze momentum indicator and head over to the style. I want you to change color 1 to red and color 3 to green. Untick the plot below it and click on the OK button. And you will have our chart looking like this, as we won't be changing anything on the ATR indicator and the strategy is set. Now let me briefly explain how these indicators work. So first of all, let's start with this Bill Williams indicator, as this is going to be our main indicator for entries. According to the author of the script, this indicator is based on Bill Williams' recommendations from his book, New Trading Dimensions. It appears as a histogram, with a moving average that runs through this histogram. It is considered that when the oscillator is colored in blue, it means we have more buyers taking position in the market, and when it is in red, it shows that there are more sellers taking position in the market. And if the histogram is above the zero line, it means we are in a bullish run. Whereas when it's below the moving average, we are in a bearish run. Now the moving average on it serves as the momentum in the market, as when the histogram is inside the moving average, it shows change in price direction and equally signifies drop in recent movement of the market. Now, for our confirmation indicator, we're going to be using this squeezed momentum indicator. This indicator shows the periods when volatility increases or decreases. In other words, when the market goes from the trend into flat movements and vice versa, as this indicator will help us filter false signals from our main indicator. And for those of you wondering what the ATR will be doing for this strategy, well, it is going to be used for stop losses, as we would be using 2 times of its value to place our stop loss. Please note that we are hunting for reversals here, so in general, our risk to reward ratio is 1:2. Okay, now let's actually understand how to trade with this strategy. So for a long position to be valid, we first need to have the Bill Williams histogram be below the zero line of the indicator. And we would want to see the histogram change to blue. Thirdly, we would want the histogram to be inside the moving average, and lastly, our confirmation indicator have to be green in color and also below its zero line. And once we have these conditions met, we will go ahead and place a buy order at the top of the trigger candlestick. And the stop loss will be set at 2 times the ATR value, as our take profit will be 2 times our risk. Exactly the opposite is true for short positions. For a short position to be valid, we first need to have the Bill Williams histogram be above the zero line of the indicator. And we would want to see the histogram change to red. Thirdly, we would want the histogram to be inside the moving average, and lastly, our confirmation indicator have to be red in color and also above its zero line. And once we have these conditions met, we will go ahead and place a sell order at the low of the trigger candlestick. And the stop loss will be set at 2 times the ATR value, as our take profit will be 2 times our risk. Okay, let me give you a couple more examples. So here, we see that we got our sell signal. But the histogram is still above the moving average. Now we waited to see it get below the moving average. But our confirmation indicator does not agree with taking the trade here. So this is considered as a void signal, and we would wait to move on to the next signal. Here is another example where you shouldn't take a buy trade. Okay, we see that the Bill Williams have given a buy reversal. Order as everything aligns with the strategy. But the squeeze momentum is already above the zero line. So we wouldn't be placing any trade here, as we would wait on to the next available signal. Okay, here is another example of a good trade. So we see we met all our conditions here. And we would be placing our stop loss at 2 times the ATR value. Now notice that our trade started at this candlestick right here. As we place orders above the wick of the trigger candlestick for a buy and below of a sell. And we see how smooth the trade went. We see the strategy is doing a pretty good job at eliminating trades when the market is being choppy. We see in the first example the price was above the momentum moving average. And when it traded below momentum, our squeeze indicator stopped us from taking the trade. As we see our trigger candlestick was the next candle where all our conditions were met. The reason why I love reversal strategy is due to the high reward ratio. At over 2 times the risk. Although it would give a lot of false signal in a trending market. However, this strategy does a perfect nice job to eliminate most of them, giving the best entry possible. Okay, let's start as we'll do our back testing and see how profitable this strategy is. So we just finished the back testing for this strategy. And we can see that the results are amazing. We had a win rate of 71% in 200 back tested trades. Having won 142 trades and lost 58, which made us 226% return on investment. And I found those wonderful trade setups within 5 months.